Asia's stock market steadied as semiconductor shares bounced back to break an expensive losing streak, while a bleak demand outlook from China dragged down commodity prices and investors turned their attention to the U.S. earnings and data. Wall Street's three benchmarks ended higher overnight as investors returned to mega-cap growth stocks, helping both the S&P 500 and Nasdaq recover from their worst weekly performance since April. Investors will turn to June inflation data due tomorrow for hints on the future rate path for local South Africans, as well as monetary policy, which has remained tight as the central bank tries to steer inflation back towards the midpoint of its 3 to 6% target range. Looking at the markets, they all share largely flat. Financials down 0.1%, industrials down 0.3%, and resources also in negative territory, down 0.9%. The rand is trading at 18.37 to the dollar, 19.98 to the euro, and 23.74 to the pound. To give us more analysis on the markets, we are joined by Martin Smith, who's a portfolio manager at Anchor Capital. Martin, thank you so much for your time. You look at the market's picture from the moment we opened right up until now, and I can't quite get how the market has moved. And just to correct that, the resources are not actually down 0.9%, they're actually up 0.9%. But the picture was quite different a little bit earlier on. What do you make of this evolving picture looking at our local markets?
I think volatility. I think you're seeing a little bit of a grind higher, and I think I'm still quite constructive on the SA market in general, but I think you're seeing, even just globally, it's been a bit of volatility and kind of seesaw between different themes. Some days something is good, some days something is bad. And I think you'll kind of see that volatility continue as we get news flow around interest rates or CPI or Chinese data. So I think we very much data dependent at this moment in time, and that's kind of having this little bit of a seesaw effect on the markets. But in general, things are grinding higher both locally and abroad. So that's positive, but just maybe not too much fun for equity investors.
Is that theme or that sort of sentiment also moving towards the rand? Because this was a currency that a couple of weeks ago, when that GNU cabinet announcement came through, things were looking a little bit nice for the rand, and now that picture has changed somewhat. What's driving that?
So I think it's a couple of things. So one, I think the broader kind of global investor base is looking for South Africans or the South African government to actually start to kind of put runs on the board and start to move things in a positive direction from a growth perspective. So I think they are adopting a bit of a wait and see approach from that perspective. You've also got what's happening with interest rates, both locally and abroad, and how that's going to affect the rand and the dollar. So the dollar's been basically bulletproof for the better part of the last 2 years or so. So if you see a weaker dollar, that'll obviously feed into the rand doing a little bit better. And I think just global sentiment, like you mentioned at the beginning of the show, you've seen a bit of a flight back to kind of the dollar and to bigger mega caps there. So you've got sentiment that needs to change. The weaker dollar needs to come into play. And then I think we need to kind of see what South Africa does on a more medium-term basis.
In terms of company news, we got earnings coming out of Cashbuild as well as Kumba Iron Ore. Which of the two companies caught your attention?
I think the Cashbuild result was quite pleasing. I think they spoke about the fact that it's kind of improving quarter to quarter from a revenue perspective, which I think ties into the fact that we may see a little bit of a bottom from a kind of consumer perspective, because obviously consumers have been under a lot of pressure. You've had higher interest rates, low GDP growth, and all those things kind of tying into a bit more of a difficult environment for consumers. But things are starting to point in a bit more of a rosy type of a picture, and maybe we're starting to see some green shoots, which obviously ties into not just Cashbuild, but kind of the broader economy in general. So hopefully that's a positive move and something that filters through across companies.
This week, it's all about the tech earnings. What are some of the themes, or perhaps one theme that we can pin down that you're going to be paying attention to?
Yeah, so I mean, there's a lot of different tech companies with different drivers, but I think the two I'm probably looking at the most is, one is AI spend and any type of monetization that comes from that spend, because I think that's what the market's been really looking forward to, is how that filters through into earnings. So it's going to be interesting to see that development. And the other one is ad spend. I think that's something that's very important for companies like Google and the like, and also quite a good read into the general economy of the US from that perspective. So ad revenue spend and AI spend and AI monetization are the two kind of themes that I'm looking forward to.
What do you make of the so-called Trump trade, assuming that there was something called a Trump trade a couple of days ago?
No, I've definitely heard of the Trump trade. And I think if you look at the way that the market's positioning itself now, I think it is for Trump to win. Obviously, it's going to depend on what happens with the Democrats and how that unfolds, and policy changes, obviously, with Biden stepping down. So I think we'll kind of still see in the next few months how that transpires and how the voting base changes or doesn't change. But at the moment, it's still looking like Trump will be the one that comes in November.
The one thing I wanted to ask you, do you ignore the politics in the lead up to the November election, or do you focus on the growth, the Fed, and earnings? What are you picturing?
So I think you got to take a little bit into account of what's going on from a presidential campaign perspective, because ultimately, does it affect the broader drivers in the US government? A little bit, but there's also kind of subtle differences between certain companies. For example, the green side and green energy is way more on the Democrats than on the Republicans. So you've got to have a little bit of nuances insofar as what the underlying policies are. Trump, for example, likes a weaker dollar and a lower tax rate. So it does play a little bit into your thinking of things, but ultimately the big drivers remain the big drivers, and you invest in companies that have got good growth kind of throughout the cycle. So that kind of informs us.
Martin, thank you so much for your time. That is Martin Smith, who's a portfolio manager at Anchor Capital. We're going to take a break, and when we come back, we'll have more news.